Hi, good morning, everyone, and welcome. I'm Joe Witt, President and CEO of the MBA, and I'm very grateful that you joined us for today's edition of MBA Bankers Buzz. We've got another good program lined up for you today. We're going to talk about the subject of fraud, and my guest is Tara Ambrose, who is a fraud specialist with the Minnesota Department of Commerce. Hello, Tara.
Hello.
Welcome
Thank you
to
for
the show.
having me. I appreciate it. Fun to be here.
It's definitely my pleasure. One commercial before we get going. I wanted to alert you to the fact that we have one of our best specialty programs coming up here on Thursday, August 13th. It's called our Bankers Conference. We bill this thing as a one-day convention for people who can't go to the three-day annual summit that we offer here at the association. We have convention quality speakers. It's a one-day event. You don't have to worry about overnights. And it's one of our biggest growing programs that we have right now that we started offering a couple of years ago. Check out our website, www.minnbankers.com, for more information on this fantastic program. All right, with that, we'll get started. Tara, please tell me a little bit about yourself. Are you a local person? Did you grow up here in Minnesota?
I did. I grew up here in the Twin Cities area, and I spent most of my career in the local metro. And I spent a couple of years in Indiana, not too far away. And early in my career, I did get the opportunity to spend a lot of time in the Philippines, which was really unique part of my career as well. My first job was a bank teller, and I loved that job. My first non-food, non-clothing retail type job. And then I eventually got into the brokerage industry, which I spent 20 years in before joining the Department of Commerce as the Senior Fraud Ombudsperson last year.
Excellent. Yeah, so your title is Senior Financial Fraud Ombudsperson with the Enforcement Division of the Commerce Department.
Yes.
Now that is a mouthful.
It is.
And we're going to dig pretty deep into what you do.
Sounds good.
But what's kind of your elevator speech when people say, "What do you do?"
Yes.
What's the 1-minute version of it?
My little team at the Commerce Department is focused on disrupting fraud and exploitation that targets seniors, people 65 and above, or vulnerable adults in Minnesota. We do that in 4 ways. We actually do interventions directly with consumers. So we will call out and talk to them and try to help them understand they're a victim, help them take steps to protect themselves. We work primarily with financial institutions. So we're talking to banks and credit unions, broker-dealers, investment advisors all day long, assisting them with these situations, helping them with holds pursuant to 45A, which I'll talk about later. And then we also assist law enforcement and adult protection in their investigations of financial exploitation as well, and can partner with them. And then the final component of what we do is public education. So we are honestly every week out in the community somewhere doing education, whether it's for financial institutions or for directly at senior centers or assisted livings. We do a lot of work with AARP and other partners that are in this fight with us as well. So we are part of the enforcement division, but we're very different than what they do. We're focused on supporting and kind of partnering with financial institutions. We're not doing oversight of the financial institutions per se, and in the way that we work with them. We're just really here to support them when they have these issues. And I'll get into a little bit more about how we do that.
Yeah, and it's a fantastic role. And, Minnesota is very fortunate to have you guys in that role. And again, we'll dig deeper into it, but that's a great explanation, just a reminder that you are there to serve, and we appreciate that. I want to dig a little deeper into that career path you were talking about. I find it so fascinating how people end up in positions like the one that you're in. Like for me, I totally love this job. I tell everybody that. It's just fantastic. But growing up, of course, I never knew something like this even existed. There's no 5-year-old kid that says that they want to be an executive of a trade group. It just doesn't happen. I just am so fortunate that I stumbled into it. So how about yourself? Give me a little bit about that career path, and including what brought you to the Philippines.
Absolutely. So, the bank teller job was kind of like, my break into professional kind of career stuff. And I did a little bit of different things throughout, but I started at Ameriprise in a customer service position. I didn't have a financial background per se or an appetite for that, or wasn't specifically looking for a brokerage career. But very quickly, when you start in that industry, you often get the opportunity to get licenses, and that's how you kind of advance. And so as you get your licenses, and I got my 6 at first, which is mutual funds, and then got my Series 7 eventually, and then I got my Series 24 eventually. So sort of as a way kind of investing in your career and the education and learning. So I spent a lot of my time working at a local broker dealer, and back in the early 2000s, they did a lot of offshoring and had vendors in the Philippines, and I was honored to be able to go there and do training. So I started out in customer service, was in the brokerage realm of taking, this is before everything was online. So like we took trades over the phone. I took stock trades and option trades and mutual fund trades, and did customer service. And then I became a trainer and coach and mentor of the new hire phone associates. And then I got the opportunity to do training in the Philippines. So when I got to go there, I'd go there for, sometimes months at a time or weeks at a time. And that was just a life-changing experience. And I'm forever grateful for that company and for that opportunity. I developed into a professional kind of training career path, and then it focused on compliance training. I switched a couple different things at times and was at a different broker dealer when I got the opportunity to stand up a team specializing in protecting vulnerable adults. And I didn't have an investigative background, but the reason I think I got the job was because I had sort of that component of education where I could foster a change. The brokers, as many financial advisors are, they're a little hesitant to like, how do we have these conversations? How do we question someone when we suspect fraud? Do we really want compliance involved? Like that kind of thing. Like, so it was a culture change that was needed to help advisors understand that they do have a role in protecting clients, and many of them want to, they just didn't know how. So they recognized they needed somebody with that kind of education background and that could help foster that change. And then I learned the investigative part of it. That was about 10 years ago. So I grew a passion for this, and it kind of turned into my life's work, and I don't want to do anything else now. It's kind of, that's my focus. And I just had this desire to do more and reach bigger audience and things. And I had actually worked with the Commerce Department, the previous ombudsperson, Marty Fleischhacker. If any of you met him, he was amazing. I'd actually worked with him at the brokerage firm I was at and worked with his team. And when I saw his job open up after he retired, I was like, I'm going to go for it. I think I want to do that, and got the job. And I am really happy here. I think it's going to be a great opportunity to expand what we can do here in Minnesota. We are, I think, a leader in many regards. And I'm really proud of that. And I think we can continue to grow on that.
Yeah, well, as I said, we're really grateful to have you. And we did work with Marty, and it's fantastic that that you were willing to step up and take that role. It is super important. Like I said, we're very fortunate to have you in that position. Banks are often called sort of the last line of defense against fraud, because if we hit the send button on a wire, or we decide to cash a check or whatever, that's kind of the end of the line often. And the fraud goes from being something that we prevented to something that has actually occurred. And bankers take that role very seriously. But also, on the other hand, they're really grateful to have resources. And I think that's where you come in. We want to make sure that people understand that you guys are a significant resource in this area. So how can you be most helpful to banks if they get a questionable transaction, or if they see something that they suspect is fraud? How do you think you can be most helpful in your department?
Yeah. So our team really does help banks, and we want to empower banks and credit unions. They're called financial services providers under our statute. So we also assist broker dealers and investment advisors too. We really want to empower you to take action. And so under Minnesota's law 45A, you actually do have the power to do a few things. And so part of my role and my department's role is to make sure you guys feel confident in taking those steps, and you can do it on your own. You don't necessarily need our help to do it, but we're there when you need help, and when maybe you've tried and there's still an issue and you want some additional support. These cases, especially when you're dealing with sophisticated scams, it's not always one conversation, as you know. They need to hear it from multiple people. It might take time. So the way we really come in is a way to help people understand what options are available to kind of slow this down. We remind them what steps they can take, and then we can give them suggested talking points, suggested resources, things like that. And then, again, we can actually take action and call out to the consumer as well. We're a small team, me and 2 investigators, so we can't do it every case, but on those cases where you really do need our assistance, we're there to help. And so I think that's where our role really comes in, is especially if the case isn't being picked up by Adult Protective Services, if the case, if something's really imminent, give us a call and we can see what we can do to support you in that moment.
Right. So just to clarify, the statute we're talking about is Minnesota Statute Section 45A.06. And the MBA actually passed that law back in 2020. So we were the lead sponsor of the bill. We had seen this type of bill get passed in one other state. And at the time, now a bunch of states have done it. So give us the highlights of that of that bill. What does it allow banks to do when they have a reasonable suspicion of fraud?
Yeah, that's a key too. You don't have to have proof. You don't have to have done your full investigation. But once you have that reasonable belief, you can do three things. You can report the concerns and not break privacy. So you can report it to the Department of Commerce. You can report it to Adult Protection, which is through the Minnesota Adult Abuse Reporting Center, or MARC, we like to call it. And then you can also report it to law enforcement as well. The other thing that you have the ability to do without technically breaking privacy laws is to reach out to a trusted third person. And we're going to actually talk about trusted contacts, which is a little bit different. I mean, same concept, but now codified. And so you have the ability to reach out to somebody that you believe might be able to help in this situation. And I'll get into more detail later about that. And then the third thing that you're able to do is to do a temporary hold on a transaction that you believe would result in financial exploitation. It is temporary. It's meant to be for 15 business days. You can do an extension of 10 business days. We can help you through that and talk about, what the options are should you be approaching the deadline and nothing has changed. That's where we can come in and talk you through that. But the idea is that 15 business days, that hold, the scammers rely on consumers' impulse and getting them in that heightened emotional state so that they can't think and they can't they isolate them and say, don't talk to anyone, don't tell anybody what's going on, don't trust your bank. And they want them to act, and they want them to act now. So giving that pause will give time for sometimes just the consumer to think, right? And just take that step back and get out of that heightened emotional state. And it gives time for the bank, for the financial institution to try some measures like reaching out to the trusted contact, doing the reporting. It gives time for Adult Protection or law enforcement to get engaged, or for Commerce to try to help as well.
Absolutely. And, the hearing the banker say that this looks fraudulent is one thing. But if you have law enforcement inside the bank saying, we've seen this multiple times, we know this is a scam, we know this is a fraud, or your office says the same thing, during that pause period, you can really make some inroads with that. Do you have any examples of situations, again, without getting into the privacy thing, but what types of things are you seeing out there when bankers contact you with respect to this type of a pause? Just trying to slow down, just trying to give the people additional information. What are some of the scenarios that you're seeing now that are a little bit more common?
I'm going to give you one example that's a little bit extreme, and then I'll give you a common good example. So one example is I got a case about a year ago from a woman who was taking out large sums of money. She was transferring it from her brokerage firm to her bank, and then she sent a wire from her bank, and we didn't catch on right away. As you said before, like, banks are the last line of defense, but sometimes it's hard to even spot if fraud is happening until money has moved, right? Like, that's how you figure it out. And so sometimes that's where pattern recognition comes in, and keeping track of what's happening over time really helps. But she originally said that she was using that money to buy real estate, but where she sent the money was to a gold company in out of state. And we've seen a real big trend in the last year of people buying physical gold bars. And I know a lot of us think from movies like gold bars are like this, but they're really like this. They're like domino size, and they're worth a few $1,000s, and you can come up with a box that's 100,000, hundreds of thousands of dollars. And the scammers have switched to that tactic because they know that banks will scrutinize a wire to the third party. They know that banks will scrutinize a request for $100,000 cash. But if the person shows up to a teller and says, I need to wire $100,000 to this gold company for the benefit of me, it's to myself, my account, sometimes that sneaks by and it doesn't seem as suspicious. It seems legitimate. The gold company appears to be legitimate, and it typically is. And then the gold is delivered to the consumer. And then the scammer has them handed off to a money mule or a courier. That money mule or courier may be part of the scam. Most likely they are not. They might know something shady is going on, but sometimes they're like DoorDash or like Uber drivers too.
Right.
And so then that what we've been told by law enforcement is that gold sometimes is consolidated in port cities and sent back on ships to some of the big organized crime rings out of the country. But that gold is hard because you can't tell what happens to that, right? That looks legitimate. So we had a case where she sent a huge amount to, the gold company. We used holds. The next time she came back and requested more, even though she said she had never need any more. When she was requesting more, I had the local sheriff go out and talk to her as well. I spoke to her multiple times, wouldn't tell us what's going on. Another 6 months goes by. She's trying to get the rest of her funds. We use holds again to try to slow it down. And then nothing, then all of a sudden she goes quiet. And then she calls me out of the blue and says, I do think it's a scam. And so we talked it through, and it wasn't anything that we said to her. Sometimes those are really hard cases where we've tried everything. We've given her all the examples. We've tried to slow it and everything. It was something the scammer said that finally convinced her it was a scam. Turns out it was a bank imposter scam. She thought she first thought she had her computer hacked, and then she thought she was dealing with the fraud department of her bank this entire time. And the way they get, and that's one of our most common scams right now, is they pretend to be the client's trusted bank. And they'll say something to the effect of, the bank is under investigation, or so don't tell them what's going on. And that really led to a significant loss for her, which also has significant tax consequences. And so I'm glad she didn't lose the rest of her money, but it took a long time to get through to her. And my whole point is, like, we didn't give up either. We kept trying to put up blocks and trying to talk to her. And it eventually, clicked. The more common story is we will get a call from somebody, a bank that says, they're asking to move all their money and they're being really secretive. They might be on the phone. Red flags are going on. And when we talk to the victim, they're, I can't tell you what's going on. And we might be able to get them to give us a little cute clue. And it turns out, again, they think they're dealing with their bank. And sometimes that starts as a tech support scam. And then the way that they're so successful is often before they even contact the consumer, they're already in the bank. So sometimes they can get in with view only access with a compromised username and password that they bought off the dark web. And so they're already looking at your account when they call you, which can help them seem really legitimate by saying, I'm the fraud department of your bank. Did you just purchase $600 at Walmart? No. Well, how about these other purchases? Okay, that's legitimate. Okay, well, to mark this $600 transaction as fraud, I just need to send you a code to your phone, and I need you to read that to me. Well, now they actually have the code to transact. So they're really sophisticated about impersonating banks right now and really good at it. And so I'd say that's one of the more common ones. So an example, we had a call last week where someone was sort of in the heightened state there. We were able to use a hold. And when we talked to her, she still wasn't quite believing us. But a couple of days later, called us back and said, you were right. It was a scam. So again, just that time to think, even when that first conversation didn't seem like it went well, giving that time, not letting her have that money, having that hold on, was able to give her the time to think about it and realize it's a scam. Maybe talk to her family or talk to somebody else she trusted.
It's just awful how good the fraudsters are getting. Part of it is technology based, and they just have more information and more data. The voice recognition stuff is awful too, that they can impersonate voices with even just a tiny snippet of a couple of words that somebody says. They can figure out exactly how their voice patterns go and impersonate someone. It's just awful how good they're getting at that stuff.
Agreed.
And so we talked a little bit about this statute. If any of you haven't heard a lot about that statute and you want to know more about how it works, there's also liability protections in there for the bank or the other providers, that financial providers that are covered by the statute. Give us a shout here at the MBA. We can give you more information on how it works from the technical side of it. You touched on trusted providers, trusted contacts, which is another bill we just got passed this year.
Yes.
With the Commerce Department's help and support. So our idea was this hold is working really well for the people that are covered by it, which is seniors and vulnerable adults. But because it's housed within that section of the statutes, the Minnesota statutes, it doesn't do anything for people who don't fall into that category. So some banks and some of the core providers have started allowing people to list a trusted contact on their deposit accounts, for example. And that trusted contact is somebody that the bank can talk to if they see any red flags of the type that you're talking about in this scenario. So we wanted to not only have that be a contractual possibility, but we wanted to put it into the Minnesota statutes that it is something that you have the opportunity to do. And then we also built in the same types of protections that we have in the other statute, protecting banks if they take action under that particular provision and they go ahead and contact one of the person that's listed as the trusted contact, and also protections if you don't. So we're covered on that as well from the legal side. But so how do you see the trusted contact thing working out? Is that something that you see as being another valuable tool?
It's one of the most valuable tools. So it's been a part of the brokerage industry since 2018, and they actually have a requirement. So just to be clear, this new law that goes into effect August 1st is not a requirement. It's permissive. You can choose to incorporate a trusted contact program if you wish. There's some guidelines on there if you do, and it again talks about immunity and provisions there. But the trusted contact can be such an integral part of intervention. And so, when we have one listed, that gives an option for the bank to call out and have that conversation with them. It doesn't mean you share all the account details. Generally it's supposed to, generally it should be something like, so-and-so is our customer. They listed you as a trusted contact. We're concerned they might be part of a scam. They're asking for a big percentage of their account. They're not going to give all the details on the account. The trusted contact cannot transact. They can't give instruction on the account. That's not the purpose. The purpose is to engage them so that they can help in the situation. They might then be able to have a conversation or be willing to do a joint conversation with you and the client who is being victimized. They work out really well. There's no obligation to call that person too. So if that person is not the right person to call, you think it might break trust with the consumer to do it at this point in the game. That person is the actual person you're concerned about doing the financial abuse. Obviously, you're not going to call them in that circumstance too. But there are cases when the bank's like, we don't have anyone. We don't know of anyone. They don't have a beneficiary listed on their account. They don't have any family that we know of. And then we get really stuck, especially if, they won't talk to us as the Commerce Department, or they won't talk to Adult Protection, or Adult Protection won't take the case. So they can really be an integral part in sort of getting that support, as people separate themselves from scams as well. They do need support. And so having that trusted contact person as well can be the key part to keeping them from going back into the scam as well.
Absolutely. Excellent. Let's have it.
It is the way it's written right now. I believe it is for consumer accounts. Business accounts or entity accounts typically have their own succession plan, things like that. So they might want to add an authorized person or something for information, but generally it is going to be for consumer accounts. Mm-hmm.
Thank you. So that's exactly why we hope. That's what I was hoping you would say. That's why we wanted to work on the bill. And again, if you have technical questions about how that bill works, how that new statute works, go ahead and give us a shout here at the association. We'd be happy to give you some information on it. We talked about banks being the last line of defense. One of the things we've been working at the national level and in individual states is making other businesses more accountable so that we're not, in essence, the only line of defense. The couple examples that we've been focusing on are telecom companies, because a lot of scams are going through either telephone or text. You just mentioned it in your example. We think that the telecoms can do a better job of stopping some of the frauds that are happening. Like on my phone, I'll get scam likely when a phone call comes in. Okay, why is that even going through? They got to figure that out. Second category, that's another troubling situation, is like social media providers. They make a lot of money by selling advertisements on their platforms, and they know that a certain level of those advertisements are actually fraudulent, which is a tough situation. There is a statistic that Meta makes 160 billion on selling advertisements, and fully 10%, $16 billion of their ads are fraudulent. So we've been working to try and figure out ways that we can make those companies more accountable, because they're the avenues that often start the fraud. So one of the things that we were happy to see is there's a bill in Congress called the Scam Act. It would require these social media outlets to do four things: to make sure that they verify all the advertisers and that they're legitimate. Active detection of fraudulent activity, ad takedown when they are fraudulent, and then finally FTC enforcement of that situation if they detect fraud. That bill was introduced in February, and March, a month later, Meta, Amazon, Google, and a whole bunch of online providers signed an accord promising that they would do a better job of trying to stop this fraud. Now, I don't think that timing is an accident. They probably always had the ability to do it. There just wasn't a good enough business case to make them do it. So even as we're educating banks, even as we're providing tools for how they can do a better job of stopping the fraud, we're also working to get at the root cause of some of it, which I think is going to pay off as well.
I think until those regulations do catch up or the companies do take additional measures, that is something I use in my public education, is to let them know that, the companies are, especially the pop-up, it might look like something that's coming from your device, but it's actually an ad. And I tell them how to identify that. And I explain that the Google results, when you search something in a search engine like Google, the scammer might pay to get their ad higher than the legitimate one. So right now it's focused on education, what we can do at Commerce. We don't have a lot of, oversight over some of those companies, or any, I should say. So I think, certainly there's a lot of research out there that shows, what would be really impactful. And I think that is, you're right, the front end is technology based. And so if we could slow it down there, that would be ideal so that banks aren't the only ones trying to put those stopgaps into place. And
that's absolutely what the ABA is asking for. They want a whole of government approach to this. They want the FCC, Federal Communications Commission, to do more work on the telephone side. They want the FTC on the social media side. They have to get engaged. They have to start doing their job of making sure they're providing good protection. And I think we might have one question.
We do. Sorry, I'm going to unmute myself so that people can hear me. Or not.
Okay, I'm going to try to just say this very loud. How does the FDIC view the special hold that we can put on someone's account when fraud is suspected? This really wouldn't fall into Reg C, correct?
Okay, so I'll repeat the question. How does the FDIC look at this temporary hold that's put on the account so that we can do the fraud analysis? Are they okay with it, et cetera?
As far as I know, they're totally supportive of it. I should say that in the regards that we have authority to do this, and it's separate from the FDIC rules. This is designed, again, the whole provision 45A is a permissive statute. We're not requiring you to do anything. You have the option, and it provides some protections if you do that. And so that was the intent behind the rule. I haven't heard of any issue that the FDIC has with that. So I think I would probably have to direct that question back to the FDIC if they have any concerns. But certainly, we support that from our state regulation perspective and what we can control and enforcement. And that's something that we're, again, partnering with you on to try to support you to slow these things down and disrupt them.
And we have talked to the FDIC about it. It is completely separate from the other holds that are in Regulation CC and elsewhere. It is a legal opportunity. It is something that they understand is part of Minnesota law, and I haven't heard any issues with them at all.
Great, thank you. We have one more question. How does this apply to trust and trustees? Does a trusted contact have the right to know about activity under the trust, even if the trust agreement forbids it?
So this is where I have to be careful. I can't give legal advice or tell you how to interpret the statute. Trusts are challenging because they are technically entities. They generally have a succession plan, that sort of thing. But in cases where it is a trust where the sole trustee and the sole beneficiary is a vulnerable adult or a senior, then some banks may choose to interpret it that it applies, and they could apply both the trusted contact and 45A. That's really something you need to discuss on a case-by-case basis with your compliance and legal teams as well.
Perfect answer. All right, I see that we're running up against our time limit here. Is there any final comments you have on anything we haven't talked about
Well, I think when you
that you thought maybe we would?
Well, I think we talked about, when we looked at ways we can help with industry, we did have one success in the legislature this past year too of the cryptocurrency kiosks. If you weren't familiar, they were like ATM machines in a lot of grocery stores and the gas stations and such. And the scammers, again, to disrupt it so the bank couldn't see where the money was going, was coaching people to take out cash, direct them to drive to the nearest crypto ATM and put the money in there. And they often, that was often a starting or like a entry point to the scam to give it legitimacy. So a lot of these were crypto investment scams or other types of scams where then they would show the consumer what looked like their money was safe somewhere. And that would get them to put more money in other channels as well. So even though sometimes the cryptocurrency kiosks weren't huge dollar amounts, it often was a starting point as well. We had attempted to put some consumer protections in a few years ago in partnership with AARP and some other organizations like the MBA, and they were still finding ways around it. So this past year, the legislature was able to successfully ban them in the state of Minnesota, which we are one of only a couple of states that have done that so far. So it doesn't ban crypto. You can still access crypto. You're going to just have to transfer the money from your bank. You just can't take it out in cash and put it in an ATM in Minnesota anymore, which is actually a big win for protecting seniors. They were the primary victims of that scam.
Yeah, we were really pleased to see that one as well. When you look at those three pieces of legislation you're talking about, I think Minnesota might be the only one to have all three of those. We are definitely on the front edge of this, and the kiosk legislation was part of the Commerce Department's bill itself. They wanted to carry that one. They thought it was super important to get that done. We certainly supported it, and it's a great partnership that we have. When we bring those issues to Commerce, either they carry it themselves or they encourage us to do it, and we've been doing a great job of getting it done. Well, thank you again for being here. It was a pleasure, an absolute pleasure to visit with you today, and keep up all the good work. And bankers, if you haven't contacted these folks, when you see that significant red flag, definitely give them a shout so they can help you out and be a resource.
Please
Thanks
do.
again, everyone, and have a great day.